fun time, have a fun time. Monsters, tell me, do you believe in those monsters? I'm talking dreams so big that they'll haunt you, or they'll calm you. That's how you know if you gotta go and get to win and not conquer. I had to go out and get it without a sponsor. Kept it real, never crooked, yeah, that's honor. Now I can go out and get it how I want to. Hashtag bless, I choose.
What is up, Rumble? What is up, YouTube? Welcome back to the Ryan Matta Show. I'm your host, Ryan Matta. Thank you guys so much for joining us on this beautiful Friday night. And it's late. So, guys, do us a huge solid. If you guys are just joining us, smash that like button, share this content. Let everybody know that we're live over here, specifically on Rumble. I know a lot of you guys are over there on YouTube, but come join us on the free speech capital of the internet. That is rumble.com/Ryan Matta. We have a great interview. I'm going to have one of my buddies. I just met him. It's going to be a little bit different. Normally, we're bringing on people that are Bitcoin maxis. They've been in crypto. They're all in on crypto. Bobby from Barbell Finance is more so on the traditional side of things. So we're going to have a great open conversation. We're going to learn of people's mindsets and how they're thinking and how their outlook is on Bitcoin. So before I overtalk it, Bobby, welcome to the show, man. It's an honor to have you. Thank you for joining us. And why don't you go ahead and introduce yourself, and we'll take it from there.
Yeah, Ryan, thanks for having me on. Yep. So my name is Bobby. I'm a financial coach at Barbell Financial. So I've been in the traditional finance space. I've worked in corporate regulatory compliance at large banks, broker dealers, for about 12 years. So, think about, like the Fidelities of the world, the JP Morgans of the world. That's kind of been my world. I've been primarily in corporate compliance. So my bulk of my career has been as a stock fraud investigator. Started off by investigating red flags, transactions that come into a bank or a broker dealer that look suspicious. My team would report those to a regulator or to the FBI, depending on the activity that we were seeing. Did that for a few years, and then ultimately was directing that team, and saw a lot of cool stuff, did a lot of cool stuff. Think about Wolf of Wall Street. That's literally what my team was investigating, right? The Jordan Belforts of the world who were trying to manipulate the market. We called them a pump and dump scheme. I think in the crypto space, it's like a rug pull, right? You'll see someone pump up a stock or a token that's really worthless. It's the scene in Wolf of Wall Street when the guy's in the garage and he's promoting airtime technologies or whatever it's called, right? Leonardo DiCaprio is selling it like it's gold, and it's gonna be the next big thing. So that's literally what happens, and that still happens today. So. Some guy will hop on to the next, trendy thing, whether it was COVID or Ebola or, whatever is, going to strike fear in somebody. And then they start promoting, this fake company on forums and online. And then the stock price starts going up, and they control the majority of the company, right? So they're the ones benefiting from the stock price going up. And then when they say, you know what, I think I've got enough riches here, if they sell their stock, and then all the people that they got to buy into the scam lose all their money. So that's literally what we'd investigate, all that fraud and market manipulation. Then I started my company, Barbell Financial, which is really just a money coaching business. I work primarily with millennials, Gen Z. They don't teach personal finance in schools, right? And so you graduate, you've got all this student debt, and maybe you're finally making a decent income. You're never taught how to manage that income. You're never taught how to repay this debt. You're never taught how to invest and save your money. It's something that I've been passionate about. So that's something that I've been working on right now. That's really in a nutshell, just kind of my background and kind of where I'm at right now.
Man, I want to dive a little bit down that rabbit hole of your previous work. Are we able to talk about that? About what you did, the investigations and stuff like that?
To the extent I can share, for sure. Yeah.
Yeah. So I heard that somebody that I knew claims or this company said that the SEC basically had this almost like supercomputer that would kind of analyze a lot of the trades on the market and then kind of feed that to investigators like yourself. Like those red flags you were talking about, is that coming from some type of server somewhere that they're saying like, hey, this transaction happened, this happened, and then that normally represents a red flag and you should look into this? Is there some type of software that's kind of feeding you guys alerts, or are you guys just cold going through the charts and trying to figure it out yourselves?
Yeah, there's no supercomputer. It's really just software that's parsing data, essentially transactional data. And so there's scenarios that are built into the software that
Okay.
say based on these triggers, right? Maybe it's a large spike in activity.
Yep.
Maybe there's higher risk players or clients. And then obviously like there's the sanctions part of the world, which is like, okay, now for example, like Russia invaded Ukraine, and are there certain Russian officials that we want to sanction to make sure that they're not transacting with our bank and money's not flowing with their accounts, and so we can monitor for them. So no, it's not like a supercomputer, and the SEC is not feeding the banks and the broker dealers any data. There's not as much collaboration as you would think there would be between like regulators and banks, or even with banks and other banks. It's
Hmm.
kind of siloed, unfortunately. But it's really what you have insight into is, let's say you're an investigator. I worked for a large clearing agency, and so I had insight into pretty much all transactional activity, trading hands at any financial institution, because the company that I worked for cleared and settled the majority of trades in the marketplace. But if
Hmm.
you are doing similar work that I did, let's say at Merrill Lynch, and you work for their broker dealer or their bank, or Bank of America, and you're only seeing their client activity. So you have insight into what's flowing in and out of their institution. And you would then report to FinCEN, the Financial Crimes Enforcement Network. So not always the SEC, right? There's different bodies of the government who oversee and enforce different things. But man, I remember, like, again, like it's not as sophisticated as you would think. Like I was 25 years old training the entire SEC enforcement division. And like I felt like I had no business being there or doing that. And I'm like, shouldn't they be training me? Like, I just graduated college like 3 years ago. But they looked to me and my team and our company as, like, I guess, the it people and the A team. And I guess because of the viewpoint that we had across the entire marketplace, they were very interested in what we were seeing and what our thoughts were.
Wow, that's pretty interesting. I mean, the more I learn about government, that doesn't even surprise me anymore. So, I don't expect them to be, the top of their class or the best at anything that they do.
Yeah.
They're government employees. So, but it's still interesting to see that you're coming from that type of background. I didn't know that about you when we set up this interview originally. So that's pretty cool, man. What was it like when you guys would see that type of activity? What did it mean to your business? Were there ever times where you could see things like insider trading taking place before like the rest of the market? Were you able to tell that, like, something wasn't right and an asset was about to move in either direction? Were you guys able to monopolize on just the data that you had and seeing things like that? Or was it like, we
Yeah.
saw a red flag, we got to stay away from it kind of thing?
Yeah, so we couldn't really influence the market, right? And we couldn't trade on it either. So like my group, really the entire company, actually, the policy was you couldn't trade without having like that trade pre-cleared. And so I was in a very sensitive seat, and so most anything that I wanted to trade like wouldn't get cleared. I don't really trade individual stocks anyway. I'm more of an index investor, which I'm sure we'll get into.
Yep.
But if I wanted to buy Tesla stock, even I'd have to get approval to do that. And that could take days, and then I have to like hold it for a certain period, and if I want to sell it, like I have to get approval to sell it. So there's a lot of friction in doing all that, and so it wasn't even worth the hassle of that. But the majority of fraud takes place in like penny stocks. There's not a lot of regulation on those very thinly traded exchanges when you've got very low market capitalization securities. It's much easier if you're a fraudster to scam people on like an over-the-counter OTC market stock
Hmm.
versus on a Nasdaq or S&P 500 security. It's just way more regulated, and there's just the market capitalization is so much larger. So yeah, I don't know if that answers the question, but
No, it did.
yeah.
Yeah, very good, actually. Really good answer. So tell me a little bit about, you said index funds. Break that down. What is an index fund? How does that work? And why were you trading those versus individual stocks?
Yeah, so I guess simply put, an index fund is just a basket of stocks, or it could be a basket of funds. The ones that I primarily invest in are broad-based total market funds. So
Hmm.
they typically track, an entire, geographic area or an entire index. So, for example, you can buy like an S&P 500 index fund. That's just going to track the largest 500 companies in the S&P 500 in the United States. So if the S&P 500 is up 2% in a day, then your index fund that tracks that, that the S&P 500 is up 2%. So, you could do that, or, there's really index funds for anything, right? There's the Jim Cramer inverse ETF, which is
Yep.
ETF is just an exchange traded fund, which is just more of like an intraday index fund. So yeah, I mean, it's just more of a passive way to invest at a very low cost. I'm more of a fan of diversification and hands-off investing. I'm not trying to chase outsized returns. I'm perfectly content tracking market returns. So if the the U.S. market is going to return 10% on average, right? It's historically done that, for 100 years. If we can hope that can continue going forward, that's fine with me. But I also own international funds as well. I own my primary residence, which is about 30% of my net worth. I own a little bit of bonds as well. I do keep some cash, especially while it's earning 5% interest right now, just as like an emergency fund, sleep at well night kind of fund. And then I do own a little bit of Bitcoin as well, but that's at the moment only about 1% of my total net worth. And my goal for this year is to increase that allocation. Really, the target is anywhere between 2 to 5%. And I'm getting more and more comfortable with increasing that number. I feel like the more I talk about it, and now that we have the ETFs, I feel like it's here to stay, right? And I think there was once a time where I felt like this could go to zero, and like it's super speculative, which I still believe there is some speculative nature to Bitcoin, which we can get into as well. But to me now, the risk of it going to zero, I think, is essentially zero. So it's really, I think, one of the best asymmetrical bets you can make with your money right now.
And that's very good to hear, especially coming from somebody that's in the traditional finance field. Hey, I got a couple of questions. I've never been big into stocks. I've owned a few, before I found about crypto and Bitcoin, but I was teaching people how to mine Ethereum when it was $2.64. So I was one of like the first YouTube channels to be putting. So I've been in crypto for a very long time. At an age that I was young enough to not really be, I think I was only putting into my 401k for a couple of years at that point. So, once you learn about crypto and you understand the massive gains there, it kind of took away my interest of wanting to put my money in traditional markets. And not whether that was good or bad, it's had its ups and downs. I'm not going to lie. So, but I'm always curious on when the S&P 500, or like, let's say the index fund, are those index funds their own individual shares that you buy shares of an index fund? Or is that something like almost like a leveraged account where you're like, oh, I'm going to buy this asset, I'm going to pay a premium on it, but it's not an actual share of something? How do those work?
You're basically a shareholder the way that you would be if you buy any individual company stock. And you can do fractional shares too. So for example, you can buy 0.01 Bitcoin, right? You can buy $10 of an index fund, even if the whole share price is $240, and you'll have a fractional piece of that share, right? And then you'll still also, based on how many shares you hold, that's what you're entitled to receive as far as a dividend, whether it pays a dividend quarterly or annually. So that's kind of what drives all of that. So no, you don't need to buy full amounts. That used to be the case, right? Back in the day, it used to be you had to buy full share amounts. There's like a $20 commission charge every time you want to buy or sell. So like there's never been a better time to be an investor than right now. Like you can literally buy and sell stocks, funds, zero cost. Some of them even have like zero expense ratios, instantaneously, right? It's just amazing like where things are headed. And there used to be a time even when on Wall Street, everything used to be paper, like the way we trade digitally right now. Like there used to be paper certificates that they were called runners on Wall Street. They had to actually push carts with all the certificates. So, someone from Merrill Lynch would go over to JP Morgan with, the trades that they made for the day and trade hands with all the paper. And so it's just crazy, like how far it's come. To think like where it's going to be with blockchain and all that and AI, like in another 10 years, it's crazy.
The Kadena blockchain, I don't really own many cryptos, just Bitcoin and Kadena are my biggest ones. And Kadena's CEOs and founders came from that industry, right? And they built a blockchain that could settle every transaction from the NASDAQ, Dow, S&P 500 all today on one blockchain instantaneously. And the reason I was asking that wasn't the '08 crisis partially due to the fact that it takes 3 to 7 days to settle all the transactions? So even if we shut down the stock market today, it would take them 7 days to basically figure out where all the shares were. and there were certain companies that they were selling because of dark pools and everything else like that. There was like more shares than there actually were supposed to be shares. So when everybody started to basically cash them out, there was this huge liquidity crisis because they had put more shares out into circulation than were actually there. Is that true? Or
I don't know too much about that. I mean, the main driver of the '08 crisis was just bad loans, basically. It's just leverage, essentially, to put it really simply. And so you've got banks basically going insolvent, right? You saw what happened to Signature Bank, First Republic, right? You see what's happening to New York Community Bank now. They're in the headlines. But that's basically what happened in '08. You had Lehman Brothers, Bear Stearns. They just had bad loans and they just went insolvent. There wasn't enough regulation around lending, and people were getting loans for things they shouldn't be getting loans for. They had no ability to repay these things. Then you've got people then get scared and they take their money out of the bank, and then you get a bank run, and so it kind of accelerates a banking crisis. So then there's panic, right? And then when there's panic, people start selling all their stocks and they start fleeing to put the cash under the mattress, and it just kind of accelerates from there.
so those, let's just say there's a 1,000 shares of Apple, Amazon, Google, and Facebook. Let's just say 4 of them, right? There's 1,000 of each, 4,000 shares. And then somebody goes and creates an index fund of those 4 assets. They're, in theory, then selling shares of an index fund that buy you into those assets. I'm confused. It's almost like they're making shares of shares. And then the way that you kind of said it, there's multiple ways that you can do that. So there's multiple of these shares of shares of shares. How does that settle, I guess? How does that work?
Yeah, it's basically the equivalent of owning the same stock, right? It's just instead of owning it directly, you're owning it in an index. So it's not like it's being diluted or like creating leverage in any way. Think of it the same way like when you buy the Bitcoin ETF, right? Like you're buying, you're buying Bitcoin. You're just not really owning it or holding it directly. You're someone else's, the counterparty is doing that for you, right? But if you buy it somewhere else, it's not like now it's diluting those shares or creating leverage. It's just the books stay the same, right? So the shares are the shares. Your ownership remains the same. It's not creating like baskets within baskets, right? It's not like layering it that way.
Is there, like with the ETFs that we're seeing, as far as the Bitcoin ETFs, we've had a lot of issues with exchanges like FTX, for example, that were selling, they were taking our Bitcoin and then using it and moving it to different exchanges to sell it off, right, to collapse the price of Bitcoin. And they were selling everybody's Bitcoin thinking that they would never run out, right? And they were just taking all their money and just selling and selling and selling. With the ETFs, I've only seen one that's showing proof of reserves. All this money's going into these Bitcoin ETFs. Have you heard anything about these ETFs actually displaying a balance or proving that they're actually buying Bitcoin? Do they even have to? I heard that they passed a law that allowed them to hold cash equivalents instead of Bitcoin. Is that true?
I haven't seen that. It's concerning. It's a great thing to, want to pay attention to, right? Coinbase is the custodian for the majority of the ETFs. And so Coinbase is a publicly traded company, right? And so they should be disclosing when they put out their financials, whether it's a quarterly statement or annual statement. That's something you would want to see, right? Because now they are disclosing their assets, right? And what they hold on their balance sheet. And so that's something that I think is super important to instill trust, that there are actual amounts of Bitcoin to back what they say that they're buying and to actually support the Bitcoin that your ETF that you own holds. But this is really why I'm not a huge fan of the ETF. And really the only place I'd advocate for the Bitcoin ETF personally for myself, right? Nothing I say is financial advice, is in like a Roth IRA where you can take advantage of tax-free growth, right? Otherwise, just buy Bitcoin, right? And put it in your own custody. That's the whole point of Bitcoin, right? To have control of your money and to not have it centralized somewhere. So, but like I said, the benefits of, Bitcoin, if you're bullish on Bitcoin, you think, hey, this thing's going to continue to double, triple over the next 10, 15, how many ever years, then the tax-free gains on that are incredible.
I didn't. It's so crazy hearing somebody from the traditional finance market say it like that. The Bitcoin community compares the ETF as to going on a cruise line. You get this all-inclusive trip on a cruise to the Bahamas, and you get ready to go get your ticket, and the cruise line goes, "Oh, sorry, we know you just paid $1,800, but we're going to rent you this VR headset and we're going to charge you a fee to use it, but it's going to be just like the real thing. Don't worry about the fact that you're not going on this cruise. Just sit on your couch in your living room. It's going to be just like the real thing, and you're going to pay us a fee to do it. So it's,
Yeah.
and I thought that was a pretty good analogy.
Yeah.
Tell us a little bit about Barbell Finance. I want to promote your company. I want to promote your Twitter. Everybody that's watching this show, you guys can go down into the show notes and the links in the description. You can find Bobby's website. You can guys also please swing over and follow him on Twitter, support his work. Tell us a little bit about your company and what you guys do.
Yeah, so I guess first I'll start with like why I started Barbell Financial. Like I said, they don't teach personal finance in school, and arguably it's the most important thing you can educate yourself on, right? Unfortunately and fortunately, right? Money makes the world go round, and if you understand money, life is incredibly easy, and if you don't, it's incredibly hard. So I want to make sure that people are understanding the importance in their own lives and understanding that the stuff really isn't that complex. I think Wall Street wants to create a mystique around investing because that's how they make money, right? Hey, come to us and we'll take care of you. The reality is it's a lot simpler than that. Not to knock, some of the professionals out there. There are a lot of good financial advisors, but there's also a lot of really bad ones who are very predatory. So I'm coming from a place of I just genuinely want to help people. I want to do it more from a stance of I want to educate you of how you can take control of yourself. Because that really is power. Help you create savings and spending plans, debt repayment plans, just understand how to invest, where to invest, what am I investing in, help you understand risk. Never going to sell you anything, never going to tell you what to buy or what to sell, but just help you understand, like I said, different considerations, different risks, different products, different companies and institutions. That way you can reach your own conclusions because everyone has to reach their own risk tolerance, right? And asset allocation, because all of this stuff is personal, right? Investing in Bitcoin isn't right or wrong. Investing in index funds isn't right or wrong. Being a real estate investor, right? That's not right or wrong. So I think everyone just is always stuck on trying to be so right. And you have to just figure out what's right for you and what's your risk tolerance. And do you truly understand what you're buying? Do you truly understand the risks that you're taking? Because you can't accept the risks if you don't understand the risks, right?
Mm-hmm.
So I just help people couch all these things and just create a plan for them to secure their financial future and achieve financial freedom, whatever that means to them. And, I just want to see people do well. And if they crush it with Bitcoin, I'm happy for you. If you're doing it some other way, I'm happy for you. Anything that gets people talking about saving, investing, and building a better life for themselves, however you get there, makes me super happy.
Wow, very well said, man. That's really awesome. And what if you're like a normal person, and they come to you and they're looking to invest, say they got like $10,000. What would be like a realistic expectation of return, I guess, in the current market status? What are people looking to bring in, with like $10,000 a year?
Are we talking about just investing in like in index fund and traditional markets, or
Yeah,
what,
it's like a safe
context?
play. What is that? Is it possible for people that don't know anything about stock market investing to outpace, debasement value of our currency getting debased at 7% per year?
Yeah, it's tough because I don't think anyone truly knows the actual inflation number, right? It's like there's a CPI number, great. They've changed how they measure that over the years, great. And I put out a post recently on my Twitter that inflation is really personal. Like how inflation impacts you, Ryan, how it impacts me are two very different things because your circumstances are very different than mine, right? If you don't own your primary residence, you're probably going to continue having rent increases every year, right?
Yeah.
If you own your primary residence, your asset value is increasing, right? So, or if you have a family of 5 or you're just a single guy, it's very different, right? So saying that inflation is like one size fits all really isn't accurate. So, what is inflation? Who knows? Do we know that the dollar is being devalued? Yes, that's 100% objectively true. So what can we do about it, right? We can invest in, a passive index fund like the S&P 500, which we know has historically, done about 10% year over year. Do that early enough on in your life and let compounding start working for you so that decades on, if you keep consistently doing that, that's going to start really snowballing and accelerating. So that should, as long as inflation doesn't spiral out of control, right, take care of you and actually say, hey, I'm at least maintaining purchasing power, if not doing better. And if inflation does spiral out of control, the big unknown is like what happens then to those asset prices, right? Like, do these stocks continue to just rocket higher and higher? Does my real estate value just go higher and higher because the dollar is just devaluing, right? We can all speculate on all these things. And it's also tricky because past performance is not an indicator of future performance, right? There's just so many variables. But we have to look at data. We have to try and be pragmatic about what we do with our money. But so yeah, to answer your question, I guess more directly, then it really depends on like your age and like where you're at in your life. So if you're still trying to accumulate wealth, you can be a little more aggressive and maybe take a little more risk. And then with a little more risk can try and get a little more return. If you're a little bit older, maybe you're recently retired, that person now is more like wealth preservation, right? They're not trying to necessarily accumulate wealth. They just want to get to their expiration date and not run out of money, right? That's the name of the game. And you can do that, in a number of different ways as well, but it's probably going to be a little bit more conservative. And traditionally, you've done like the conservative route with more of a mix of like stocks and bonds. And if you're younger and more aggressive, you're like heavier in stocks. And then if you want to try and like outpace just average market returns, like, hey, I want to try and beat the S&P 500. Well, now you're getting into the game of like stock picking, day trading, options, leverage, margin trading, which from my experience, like you're going to hear the news story of the person that like got rich quick. But you're never going to hear about all the other people who didn't, right? And that's not a cool story, right? Like you heard about the Dogecoin millionaire because that was just incredible, even though he didn't sell. But I always use the analogy of like a plane crash, right? It's like when a plane crash happens, that's sensationalized on the media. But why? Because it never happens, right? And it's like, holy crap, there's a plane crash. But what about all the planes that landed safely and like people just did their job and like people carried about their life and but no one talks about that. So we don't talk about all the people that like just built wealth quietly or live an amazing life or their own rich life, right? And build wealth. Like we don't talk about those people because that's not sexy. That's not exciting. But we talk about the one person who, mortgaged their parents' house and put it all in Dogecoin, right? And made like 3 million like overnight because like that's an incredible story. So, the more of like the financial tortoise, like try and get rich more slowly, slow and steady, like that's not going to sell a story, but like that is the proven way to wealth. And like that was my, approach and really focus on how do I grow my income and how do I not then inflate my lifestyle so that I'm just spending the same amount as my income keeps going up, right? I want to try and increase that gap between income growing, expenses, staying reasonable, and then I can save and invest that difference. If you maximize that, that's where wealth accumulation happens, right? Wealth accumulation doesn't happen from I'm making $50,000 and now because I'm desperate, I got to try and chase, return, right? And do something risky, like, and unfortunately, like that happens really often because I understand the attraction to that and I get it. But I think if more people focus on how do I scale my income, how do I double, triple, in our case, quadruple our income, like that's going to have so much more power. And like, that's the much massive lever. And think about it this way, Ryan, right? If I make $200,000 a year and I'm saving and investing 50% of my income, it matters far less what I'm saving and investing in versus the person who's making $50,000 a year and can only save and invest 10% of their income, right? So we get really stuck on like, well, what's the apex asset? What's going to outperform? It's like the person in that scenario who's making $50,000 a year, saving 10%, they're never going to catch up to that other person, regardless of what they're investing in. It's just never going to happen. Even where Bitcoin is now, Bitcoin can double, triple. The average person is living paycheck to paycheck and in debt. So the average person, I'm going to say doesn't even probably have 10 grand in Bitcoin. But even if they do, and Bitcoin quadruples, their life didn't change, right? It got better, but they've only got $40,000 now, right? So, that's not allowing them to retire and live a free life. That's not financial freedom. So I think a lot of this stuff and a lot of stuff you see on X just requires like context, and a lot of my involvement in X, at least what I've tried to do, is just try and find like that middle ground of just like logic and rationality. Because like I think people think that I'm like anti-Bitcoin because I'm just trying to like be the person that just like wants to kind of provide that context. But I'm not anti-Bitcoin. I just I want to make sure that we're having a logical, rational conversation about what we're talking about.
No, man, I think everybody in the chat, wow, this guy's really solid. Really, what did somebody just say? Like really level-headed, I agree with it. Really balanced, they called you. Very balanced. I couldn't agree more, man.
Yeah.
And it's
I
so
kind of
interesting that
somewhat facetiously call myself the rational Bitcoiner because I asked Twitter, I said, what am I a Bitcoiner? I own Bitcoin. But do you have to be all in on Bitcoin to be a Bitcoiner? And I got some different responses, but someone said, hey, if you're off zero and you own some Bitcoin, you're a Bitcoiner. Or if you believe that your dollar's devaluing and you have some distrust in the government, you're a Bitcoiner. So I'm like, all right, I'm a Bitcoiner then,
yeah,
but I'm going to try and be rational about it, right?
yeah,
And there's a lot of people that I think just, I think, I don't know. I try not to play into like I hate to say it, but like cult almost like behavior.
hmm
That I think that's what makes people lose their rationality. Like they lose the plot, right?
hmm
And I get it. Like it's Twitter, it's exciting, it's community. You're behind like the laser eyes and all that, and you can have fun with it. But don't lose the plot, right? Like just make sure like you understand like the plot. That's all I want to say.
Oh man, hey, I mean, everybody's entitled to their opinion, and I think you have a very balanced outlook on it. And again, before 2020, I would say the outlook for Bitcoin was hopeful. We were all really positive and inspired. We really wanted to see this thing succeed, but in my personal opinion, it wasn't until I watched the most powerful government in the world with the CIA backing it being FTX, right? Like that FTX didn't happen by accident. This kid didn't just come out of nowhere and have this perfect story and then all the backing and then all the money and all the regulators bought off and the right politicians. Like this was very methodical and it was very well thought out. And that just doesn't happen by some nerd in his basement, having poly orgies with his entire staff and no accountant making it to a multi-billion-dollar company. It's not even realistic to think back. So like once I watched that attack happen on Bitcoin and I watched this man trying to, corner enough of the market to have enough Bitcoin in his exchange or enough backing, right? Like he was months away from getting from launching a what was those carbon credit exchange where the World Economic Forum was going to begin distributing carbon credits to all of the countries, right? And you were only allowed to produce so much carbon. Then you had to buy and trade these carbon credits. And the Bahamas government, where his exchange was based, was getting ready to give him their $8 billion, right? So he was going to have $8 billion. And, Michael Saylor said it best, when you figure out how to counterfeit $32 billion, what do? You buy everybody and everyone, from celebrities to politicians to bankers to anybody that you can get your hands on, buy them off. Because if anybody realizes that you've counterfeited $32 billion, you're going to prison for life. So there's that, right? And then we just watched it. I mean, it was this close to happening to where he might have been able to sell enough to keep driving the price of Bitcoin down and down and down. And I think Saylor was getting liquidated at like $5 billion. So if you would have liquidated another $5 billion worth of Bitcoin, on top of, or billions of dollars worth of Bitcoin on top of all that sell pressure, I mean, it would have sent Bitcoin to a crazy low. But, luckily, thank God for CZ and the people that stepped up and BitBoy, really honestly, that exposed that and, allowed people like me to make a lot of money shorting it and allowed us to get all of our crypto off the exchange and saved a lot of people in my community as well, because we were all, the only people that I know that lost money on FTX were, I honestly, I don't really know people that weren't paying attention to crypto, because it was like a 2-week process that you had to get your crypto off there when it looked like it was collapsing. We were shorting it, and then
2022 was crazy. Yeah.
Wild, man. And it's just, so no, I agree with you. I don't think that there's any chance in hell that Bitcoin's going to zero, and we're watching nations, make it legal tender. I think Argentina will be next. I almost have no doubt. And then from there, it's a global adoption race. When you're taking a look at the stock market right now, what worries you the most? Do you think that people like Mark Moss have been calling for a long time, actually called it spot on? He called it the reverse market crash, where you're at a point where people are too afraid to get out of the market because the dollar is so weak right now. They're afraid to go into things like real estate because the market's so hyperinflated or overinflated, especially the commercial real estate. I know we got banks collapsing, so there's that. The Fed was announcing that they were planning to do 3 rate cuts. Now inflation's back on the rise. So, you've heard Jerome Powell say before that his mistake was they didn't act soon enough. And now he's saying that they would rather overreact or act too soon than too late. So inflation's going back up now. Do you see another rate increase? Like, what happens if it comes out and it's at 3.4 or 3.5, or inflation really makes a jump up again? Do you see rate cuts? Jamie Dimon said he didn't want the Fed to cut rates till at least June, or even think about cutting till June. What are you expecting from traditional markets over the next let's say 6 months?
Yeah, I mean, look, this is all speculation, right? Because the Fed has always maintained they're going to be data dependent. You know, look, Jerome Powell's got a very tough job. Like, I don't envy that man. But you know, I think that the market's pricing in one price cut in June, probably a very small, like a quarter basis points, right? 0.25. Could that kind of get kicked down the road if inflation continues to trend up a little bit? Yeah, of course, right? You know, and yes, inflation is on the rise, but again, the context is it went from 3.1 to 3.2. So it's basically level, right? For all intents and purposes. So, you know, but look, if things start, you know, spiraling out of control again, all of a sudden now we're back up over 4. Could there be another rate hike? Potentially. But I think what we're going to see is just the continued narrative of higher for longer, right? Like, even if it comes down a quarter of a basis point, like, we're still very elevated, right? And like, continuing down this game is going to still put a lot of pressure on people that want to, you know, spend and get loans. So like, it should still help cool down the economy. The concerning thing for me is just how much liquidity has been injected since COVID, right, in the pandemic, to help prevent that crash, right, in March 2020, right? We had the fastest stock market crash in March of 2020, followed by the fastest, you know, reversal, right? So like, and it's because of just how much money they injected into the economy to start stimulating spending after all the shutdowns and all that. So the money supply went parabolic, and now like we're kind of like in uncharted waters, right? Like, no one really knows what's going to happen from here. And like, that's the biggest concern. Like, and I understand like why Bitcoin is doing what it's doing, because like now we're entering like a debt spiral, and the cost to service the debt is getting out of control. And the only way to pay the debt is through inflation. And the administration is just spending and spending and spending. And like, there's just no like checks and balances on any of it, right? And all this money is going overseas, and it's like, you know, is that being audited? Like, is that, you know, where's that money going? And so it's like, that's concerning to me. And like I said, just no one knows how this all ends. I don't think the dollar is going to be on the chopping block anytime in the near future, right? Like, it will continue to devalue as all fiat does, and as it has historically. But as far as fiat goes, it's still the dominant currency. Like, no other nation's fiat currency comes close from like just a trade dominance and all that. So look, I think there has to be like much more loss of confidence and devaluation for it to really topple. And then again, just the debt spiral is the biggest thing. So yeah, that's the thing that you know, worries me. You know, and also because the Fed has to stay restrictive, you know, there's probably going to be more banking collapses and failures. And what ripple effects and contagion does that have on the economy? And the unfortunate thing is the middle class and lower class just continue to get gutted the entire time, right? Like, as inflation continues to do its thing, people that own assets and wealthy people tend to benefit from that, right? And but people who don't really hurt, because now interest rates are higher. So the rates on the revolving debts are higher, whether that's credit cards or student loans or, you know, whatever it might be. And so now they got to take out debt to just pay the bills. So they're the ones getting pinched, and that's, you know, that's kind of hard to see.
Apple guy over in the live chat wanted to know, he says, will markets dump if pivot from the Fed happens?
Pivot meaning like
if the Feds have to continue to if the Feds have to continue to put another rate hike in.
That would be my speculation. Again, no one knows, but I would have to imagine, because again, like right now the market's pricing in cuts. So if the complete opposite happens, now like, wow, inflation is heating up again, and now we've got a hike again. Like, because now the markets will react poorly, thinking like this is gonna be damaging to the economy, right? Like, because again, like the market has been way more resilient than I think a lot of people give it credit for. Everyone was calling for a recession by now. The recession was supposed to happen a year ago. Where's the recession, right? The stock market keeps hitting all new time highs. Bitcoin's hitting all new time highs. Wild stuff that we're seeing again. It's just a very strange times. And again, a lot of it is because just the money supply and the spending. So, you know, all that money is just flowing into just assets, right? It goes into the hands of the wealthy, and the wealthy invest their money in Bitcoin and stocks and real estate. And that's what we're seeing. So, you know, but again, it's hard, because if you look back on a timeline of history of the United States and the stock market, there were so many moments where you would have been like, this is it. Like, this is the moment that's going to destroy the country. Like, the dollar is going to be dead. Like, the U.S. is going to lose reserve currency status, or they're going to lose dominance in trade. And you know, or the stock market's never going to recover. And somehow, like, there's always been a 100% recovery rate of the stock market. So even if there's a big crash because of some reversal or some like unforeseen circumstance because we don't have a crystal ball, right? No one saw COVID happening. No one predicted the Great Depression. No one predicted World War II, right? You have all these events that were decimated markets, but somehow like the country and the economy just seems to always persevere. And there's been a 100% recovery rate, right? Like go back in time of the stock market. So you got the Great Depression, right? 1929. Then you've got, before that you had World War I. And then after the Great Depression, you got World War II, right? And then you've got, go into like, Vietnam War, Volcker, inflation era when Paul Volcker was the chairman of the Fed, and he raised interest rates up to like 20% because inflation was spiraling out of control. Then you've got, from there, the Black Monday stock market crash of 1987.
Mm-hmm.
You've got the dot-com bubble bust, right, with the internet in 2000, great financial crisis in 08, COVID, like all these things you would have been like, as scary as they were. And a lot of us as investors have only lived through maybe like one or two of these. Like maybe you're old enough to remember the great financial crisis. I was like 17 when that happened. But we're all certainly old enough to remember COVID and watch the stock market tank 10% in a day. And like, that's super scary, right? That doesn't happen in the stock. I know it happens in Bitcoin, right? But not in the stock market. The S&P 500 shouldn't be crashing 10%. And I remember watching, Fox News and CNBC, and I was pumping money into the markets because I just had faith that as scary as this is, and as everything is telling me to sell, like you have to sometimes do what's counterintuitive with your money. Like the fear, like buy the fear, right? And so that's what I did. And like, all those positions have obviously more than doubled. So just, again, no one has a crystal ball. No one knows how it's going to play out. Nothing wrong with hedging with Bitcoin or gold, if that's your thing, or silver, whatever it might be. Play your game, know why you're playing it. But I even if there's a big crash, see it as an opportunity and expecting that things will recover.
So I want to get a little bit of your comment. You had talked about, buying a house if you don't own your house, and then how, you're basically going to be trapped constantly paying higher and higher rent. So you're never really getting that breath of fresh air to say, okay, at least right now I can afford my bills. My mortgage is $2,000 a month. That's my set rate. People that are renting next year, it's going to be, mine, when I first moved in, it was like $1,900. Not this place. I bought this one, but the one I was renting, because we sold our condo at the peak of COVID, like right when COVID was hitting. I was like, oh, don't know what's going to happen. Like the market's super hot. Like maybe this is it. Like perfect time to sell, jump into a rental, sit back for, a year. That's what me and my girlfriend planned to do. And then it just turned into, they actually shut down our country. And I had a business that was dependent on the country being open, so it kind of destroyed the business. Then I'm over here in this rental that's like really expensive. Then it went from 18 or 19 to 22. Then the last year was 24. And then if I wanted to go month to month, it was 26. So, I mean, that's crazy for a 3-bedroom house. I want to play a clip for you and I want to get your commentary. I've heard that they were saying at the rate that these corporations are basically buying up all residential real estate and single family homes in America, that by like 2030, a few companies would own like 60%. But I want you to watch this video because we got some new data that just came out today. I'm going to get your opinion on this.
I just watched what has to be one of the most horrifying videos I have ever seen on this app regarding our country's financial future. It was posted by a woman named Tiffany. I will link it. She's talking about how private equity firms have been buying up all the single family homes. So up until very recently, we didn't actually have the numbers to say just how many homes they've been buying up. And most politicians across the fucking board, Democrat, Republican, whatever, have been saying, well, they're really only buying like 18% of single family homes. And then economists chimed in and said that if private equity firms are buying up anywhere from 18 to 20 to 23% of single family homes in this country, that by 2030, they would own 60% of all of the homes in America. Well, we just got the final numbers. In 2023, private equity firms purchased 44% of all of the single family homes in America, which means death for our middle class. Our generation will not be homeowners. They will have us permanently renting from like 2 or 3 companies. Now, America has a lot of problems, but this should be a unifying problem that every single person who is not part of one of those private equity firms cares about, including current homeowners. They bought 44% of all of the single family homes in America last year. And they are set up to purchase an even higher percentage of them this year.
Yeah, I mean, my first reaction, I have two things I want to say. The first thing I'll say is, regardless of private equity firms buying up a lot of single family homes, people are getting priced out of real estate, to buy their own primary house regardless, right? Like where valuations have gone and interest rates right now, it's getting harder and harder to make that payment. And so like I've seen, especially like Gen Z and millennials, like who are trying to become first-time home buyers, like to put together the amount needed for down payment now, and then where a monthly payment has gone. The same house that was worth like $300,000 when you could have got like a 4% rate now is like $700,000, and you've got to get like a 7% rate. It just made it so much more out of reach for that same person, who just wasn't able to buy it 4 years ago because they weren't ready, right? And maybe they're just were still saving or still in college, whatever it might be. So it's bad timing. That's my first reaction. My second reaction is private equity is going to be cyclical, right? So there's a reason they're buying so much residential real estate right now. And the reason is because commercial real estate, no one wants to touch that right now because everyone is work from home, right? You got all these vacant buildings in New York and in San Fran, all these major metro areas. So no one wants to touch these buildings. All these private equity firms still have investor money that needs to be invested and deployed somewhere to try and generate a return. But if all these loans are going to be bad on commercial real estate and going to be because they're going to be vacant, then they've got to find other ways to funnel that money. And so there's a lot of ways they're going to play it, but single family residential real estate, multifamily real estate is going to be the play. But they're not going to hold these properties forever, right? They're always going to try and chase where they think they can maximize returns. So if there's ever a swing into some other sector, whether that's, industrial real estate or let's say commercial real estate becomes trendy again, and now everyone's going back into the office and occupancies, tracking back up, they're going to dump probably a lot of the residential stuff and start going into more of the commercial stuff again. So again, like these are typically not like buy and hold investors. They're trying to just maximize return, and there's a lot of turnover. So look, I think it's something to keep an eye on. But I'm not going to want to spread fear. I think it's just, again, the nature of just what's cyclically happening right now.
Do you think that we should have the politicians in Washington, D.C. should be maybe more worried about making sure that 90% of Americans aren't priced out of buying a house for eternity versus banning a TikTok app? Or is this just part of the game, and if you don't get in now, sucks to be you?
Yeah, look, I feel like we can go down a long rabbit hole of like priorities with the government, right? And like, why are they spending on this and focused on that versus like, our people here, need help and support, and like we're sending money overseas and all that. But that's, like I said, a whole different rabbit hole. Yeah, look, I think real estate, has gotten, just too out of touch. Like it's become way too unaffordable. And, one solution to that is obviously we got to get interest rates, back to reasonable levels. And again, what's challenging is like, this might be an unpopular take, is like interest rates really aren't at unreasonable levels right now. It's just, we've gotten so used to low interest rate environments. Right. So you talk to anybody, talk to your parents if they bought a house in the 70s or 80s, ask them what their interest rate was. I think you'll be shocked, 10%. So, historically, I think we're still like at a very reasonable rates to have a healthy economy. It's just we've gotten so used to and spoiled of like, zero interest rate policy and seeing, sub 4% rates. But because of the, where valuations have gone with real estate combined with now the increased rates, that's gotten challenging. And the other way that you really solve for this is just you build more real estate. So I know at least in my area, they're going gangbusters with building just like townhouses and single family, but now it's new construction and it's still very expensive. So at least supply is increasing, but there's not enough demand for the people that, need the homes, or at least want to get out of their renting situation, and they got decent, stable income, but they just maybe can't scrape together 20% down payment or make those mortgage payments. So again, like a lot of this stuff is cyclical. So we are dealing with what we're dealing with right now. But again, look at that timeline of history. And at any moment, you can cherry pick a time and say how hard that must have been and bad that must have been. But then like the pendulum shifts, right? So the pendulum, I think, will shift at some point because, we can't continue watching interest rates rise and home prices rise unless like that is just like the end, like late stage empire, right? And this is it. which, I know there's people that, think that that's coming sooner than later, which maybe it is, maybe it's not. No, nobody knows. But, again, this is just where we're at right now. And I will acknowledge that it's hard for an average person, certainly the middle class, to try and get ahead. And if they want to own their home, if that's been a dream of theirs, it's just gotten unattainable.
Do you think that watching like the younger generation, it just seems like they're so anti-government, anti-bank, anti-dollar? Do you see there being a point in time where they can convince an entire generation now to go back to using the dollar versus adopting something like a Bitcoin standard, which obviously seems to protect yourself exponentially better than saving in something like a fiat currency?
What I suspect is going to happen is you've got what I call like the geriatric Congress, right? You've got all
Yes,
these
you
people
do.
who are like 80 or older who are just so out of touch. Like they didn't grow up with the internet the way we did, right? Like I remember, tapping into the internet for the first time growing up, playing like Xbox Live for the first time with my friends. Like, they didn't have that experience. So not to say they don't understand necessarily, but like it's not as second nature to them. And so they are more traditional in the sense of like they want their paper dollars and they want, more the traditional financial route. But what I suspect is going to happen is, you're going to have the millennials and Gen Z who are going to start getting into politics, and they are from that digital era, right? They did grow up with the internet. They do like Bitcoin. They do like, maybe other digital ways of transacting value. And they're not going to want to do things the way they've always been done. Like disruption is good. Like look at what Elon Musk is doing with cars and like Starlink and Neuralink and all these things. Like there has to be disruption at some point. And so I think like that's going to be a disruptive event when you've got enough people coming into that next, graduating class, going into Congress, into politics, who are more Bitcoin friendly, who are seeing, again, like if we continue down this trajectory where, if we stay on this course, then it's going to continue to be more and more attractive. I think the appetite for Congress and for politicians to favor Bitcoin and support Bitcoin. I feel like you're even seeing it now, like the fact that we even have in presidential, dialogue, like Bitcoin is part of the conversation, like asking, Robert Kennedy, like about Bitcoin, or Donald Trump about Bitcoin. Like it's just the fact that it's even part of the dialogue now. Like I feel like we're getting there, right? Like it's that leaf is turning.
Mm-hmm. It really is, man. So we got about 5 minutes left. If people want to reach out to you, they want to learn more about your business, I want to promote your Twitter one more time. I'm going to throw it up on the screen again. Links are all down below. How is the best way for people to get in touch with you? Tell us a little bit about your business one last time, and we'll wrap it up.
Yeah, sure. So you can go to barbellfinancial.com if you're interested in learning more about, any value I can provide to you. You want to learn more about just, how to secure your financial future, financial freedom. Again, I am Bitcoin friendly. So if you need more education about how to securely buy Bitcoin, store Bitcoin, risks, fees, whatever you need to learn more about and considerations, happy to talk about that. Otherwise, if you want to just understand more about having a more balanced, diversified approach to investing, we can talk about that as well. You can send me, an inquiry directly through my website, or my DMs are always open. I'm always happy to engage with people on X, Twitter, at Barbell Fi, so Barbell FI. Feel free to follow me there and engage with me. And I love interacting with you all and answering your questions to the extent that I can.
And Bobby, we got a few minutes, so tell me a little bit about Barbell Finance. And it looks like the image on your website, you're a little bit bigger. I was pretty big into bodybuilding a while back. Were you big into weightlifting? Obviously, that's where Barbell came from. Tell us a little bit about that.
Yeah, when you're younger and you're not married, and you're working and commuting, to your job, you can prioritize it a bit more. So it's still a very large part of my life. I'm still in the gym every single day. So, a couple of my biggest passions in life are, personal finance and investing and helping others with their money, and also, physical fitness, right? So love to weightlift, love to just challenge myself physically, whether that's, hey, I'm going to go run a marathon, I'm going to go climb the top of a mountain, I'm going to go load up weight on a barbell. So I kind of married those two when I create my brand, Barbell Financial. So I was definitely bigger back in the day. It's hard to sustain the mass and just to eat the way you have to eat, right? And to get the protein intake where you need to be. It's expensive. And I remember a tub of 5 pound protein. I want to talk about inflation. A tub of 5 pound protein. I remember 17 years old. This is 2007, I want to say, was $30.
Yep.
Now on Amazon, that same tub of protein is like $70.
Yes, sir. Sure is, my friend.
So yeah, just it is like if you really want to like build a body like and really do it right, like it is a full-time job. So I just don't have the capacity to do it to that extent. So now I just, in more maintenance mode, but still in the gym every single day. And I think it's important to move your body. I feel like my day is not complete until I break a sweat.
I agree, man. I say a lot of times on my show, if you're broke, get jacked, right? Like I would actually like to hear how did going to the gym, and it seemed like that was in your earlier days, right? So how did that, just I guess like just the discipline, showing up to the gym, how did that impact your life moving forward?
Yeah, the biggest impact is I didn't have the discipline at first, right? I was
Hmm.
forced to go to the weight room in high school for baseball. I was on the baseball team, and I hated it. So, but I actually started seeing results. Like I think like everyone's genetics are different, but I think like genetically, like I had some I guess foundation where like I was seeing results pretty quickly. And then you start getting stronger and you see the progress. And then it's like okay, like the vanity starts to set in, right? It's like you're 17 now, and it's like well now actually like you're getting different looks from girls, right? And it's like
Yep.
okay,
Yep.
like this is kind of cool. Like that's a big confidence and self-esteem boost. And
Yep.
so and then from that came the discipline, right? Now it's
Mhm.
like so now okay, like I want to now stick to a routine, and like this is gonna be my schedule, and this is how I'm gonna eat, and this is how I'm gonna train, and I'm gonna build my day around it. And so that then kind of has like a trickle effect right into other areas of your life, whether that's with your job, your relationships, what you do with your money, right? That discipline I think is super important. So yeah, being in the weight room, I think has taught me so much, just about being a human, and also just how I can apply those same approaches to how you train and how you lift and how you eat to every aspect of your life, and wanting to sleep well and just be healthy, and all these things definitely bleed into just like every element of your life.
I agree, man. I couldn't agree more. That's why I say if you can invest, the best investment you can make is into yourself. Go to the gym. It teaches you discipline. It teaches you how to set a long-term goal and slowly work towards that goal to accomplish something that you set and you achieved. 6 months, if you can start going to the gym, right? And 6 months from now, you don't have a six pack, right? The only person you have to blame is you, right? It's the ultimate accountability. You get exactly what you put in, and the gym's the only place that you can, I shouldn't say it's the only place, but it's, it's a place where you can always be and do a little bit more, right? You finish your set, you put your shirt on, you're on your way out the door. You're like, nope, I'm going to take my shirt off. I'm going to go back and I'm going to rep out one more set just because I want to do above what I said I was going to do, right? And it's like you what you get out of it is a direct result of what you put into it. And if you can master that mindset, right? I don't know how else to better explain it, but like if you can't force yourself to go to the gym at least 5 days a week, if not every day for 90 days, you're never going to have the discipline to run a business. And I tell that to everybody who asks me, like, I've started so many businesses over the years, and they all ask me, what's the best business to start? How'd you start your Amazon business? I want to start this business. I go, okay, just go to the gym for 90 days, right? Because if you don't have the discipline to get yourself in shape and actually take care of your body, I mean, running a business is hard. You have to be disciplined. You have to be willing to, get up when you're tired and still go into work. And you have to be able to
Yeah.
work an 8-hour day. If you're not wealthy and you don't have the access to capital, you need to figure out how to even work two jobs just to save up enough money to build that capital. So it's refreshing hearing that you have similar experiences from that.
Yeah, I find the people who voluntarily do hard things are the people who are more successful in life, right? So if you're gonna wake up today and say, like, I'm gonna go do something super challenging that probably 99% of other people aren't gonna do today, like
Yeah.
you're already ahead. And again, like if you apply that mentality and attitude to every element of your life, that's success, right?
Yep.
Like if you run a marathon, I forget the stat. I think only like 4% of the world's population is run a marathon, maybe even be less than that. So like if you run a marathon, like you've already done something that like not most people have never done. So like if you make the commitment to train for that and do that, amazing. Or you go to the gym and you feel the pain of a set and you're sore,
Mhm.
like embrace that. Like that's where the growth is going to happen. Like don't be comfortable just saying like, hey, I'm going to avoid that. Like that's the
Yep.
lifestyle that's not going to get you, really anywhere. Because the safe bet is never, going to make you successful. So again, apply that to any. It doesn't have to be weightlifting if that's not your thing. And you don't have to be a bodybuilder either, right? If you want to
Yep.
go and just do push-ups, like just again, just to understand that you're making that choice. Like that's the decision you're making.
Man, Bobby, what a great show, man. What a great way to end it. Thank you so much for joining us today. We greatly appreciate you being on the show. You got my Calendly now, so anytime if something's happening in traditional markets and you want to jump on here and shoot the shit for 20 minutes or something, you can just book a link and come on anytime, man. Thank you, and thank you for rescheduling the show yesterday too. I appreciate that.
Yeah, no worries. Yeah, thanks for having me on. Yeah, always happy to talk to you. And
all
take
right,
care,
buddy.
man.
God bless you, man. Thank you so much. All right, folks, that is a wrap over here on the Ryan Matta Show. Thank you guys so much for sticking with us. Make sure you guys swing down there and show Bobby some love. Follow him over on X. Follow him over on Twitter. Normally we do an after show after these interviews, but it's Friday night. I got my little man this weekend, so I'm going to go get my dad life on. I appreciate each and every one of you. Do me a huge solid, guys. On your way out the door, please consider smashing that like button. It'll really help push this video out to more people that haven't seen it yet, and a lot more people need to understand and see this type of content. So we greatly appreciate you. God bless everybody. We'll catch you guys in the next one. Peace.
Run.